Hey, Matt McCall here. Welcome to this live event we're jumping into. You may notice a bit of a different background here. And if you're quite the sleuth, you could tell that we are sitting in a hotel room here today. And actually, back to my roots. This is where I started my first company. Shoot, how long ago? 23 years ago. So 2004 ish, 22 years ago. Started my first company in this town, the Mile High City. So here, trying to stay warm. My Nicaraguan blood now is not accustomed to this freezing cold, but we got a good show coming up for you here today. And talk about really kind of what's been going on in the market the first 7 weeks or so of the year. It's crazy. The headlines tell one story, but underneath the hood, when you look deep, it tells a whole other story. That story that we found that is not being told by the mainstream media, not being told by many people, is what's led me to release a brand new portfolio. And so it's going to be a new portfolio. I'm calling the new energy portfolio. And hang around. You will get one free stock out of there just for hanging around today, looking at the charts. I'm going to show you because I need to educate you here first as to why we're doing this. Just telling you what to buy doesn't really help you long term. There's a lot again going on under the hood. So hopefully you can have time to stick around. And again, thanks for taking time out of your day to do that. So we're going to jump in, start sharing my screen here, and jump right into this. As you can see here, again, thank you for being here. Number one. This is it's a market briefing is what I like to call it, and really this is not just for people who invest, but it's people that have money in stock market, which you typically do either through your 401k or retirement plan or something. You might be in crypto market crazy. Maybe you're a big gold bug, silver bug, copper bug. This is important for you. Even if you might setting a checking account, considering getting money into the market, this is important because again, there's a lot of things going on underneath the surface of the market that the mainstream media and the big names out there are ignoring, in my opinion. So I want to make sense of what's going on here today. And you'll learn why I'm launching this brand new portfolio. And yes, as I said, you will get one free stock idea. I'm not like a lot of other people in this industry. I'm not going to bait and switch you. I'm going to give one away, guaranteed, between now. And of course, we'll take your questions throughout. On the right-hand side there's a little chat box. If you have questions throughout the presentation, please ask them because it's probably relevant to what I'm talking at the time. And if it is, I will definitely jump into that for you and take that question. If you don't know who I am, Matt McCall. I like to call myself a serial entrepreneur. As I mentioned, my first company, Penn Financial Group, was started in this city, 2004, middle of 2004, so nearly 22 years ago. Sold that. I had CrowdVest broker dealer, CrowdVest that raised money for companies. Point B Publishing's been publishing my newsletters. Sold that. I had a Pilates studio that I sold. Wrote two books. Been working on my third book for it seems like forever. I was on TV for over 12 years. I used to be a paid host on Fox Business every day with Charles Payne. Over those years, over 50 stocks, I've gone up over 1,000%. A lot of them much more than that. And again, 25 years in this business. But I always tell people, I don't feel like I worked a day because this is so much fun for me coming up with new ideas. I finished this portfolio today. I won't lie to you. I have this big basket of stocks, and it's just so hard to kind of dwindle down to four that made sense, that complemented each other, and want to make it away for free. I guarantee 99.9% of you never heard of it. It's a $1.6 billion company, smaller, but we'll talk about that here in a little bit. So again, in today's briefing, I want to look what's really going on in the markets underneath the surface and beyond the headlines. And I'm going to show you some data points because the data tells a story. We can all say, well, I think that, you think this. Sure, we all are entitled to our opinions. I'm going to share my opinions today, but I can't fight the data. The data tells a story. And again, most of the shifts we're seeing in the market, the rotation we're seeing, most of you are missing. I was missing a lot of it. You had to really dive deep. And this energy super cycle is the one area that most people are ignoring. And again, we're going to be launching a new portfolio here at the end of this briefing. So 2026 to me is sending some mixed signals all over the place. We have stocks that are swinging wildly. However, the S&P 500 has been in a very narrow trading range, especially historically looking, very narrow trading range, and not trading far from an all-time high. We'll show you some charts in a minute. We've crypto volatility. A lot of the selling pressure, in my opinion, on crypto is coming from AI and software. Two different reasons. One, artificial intelligence. You have a lot of people that are investing in crypto are now moving money into startups in different areas when it comes to artificial intelligence. And some of that money is moving out of crypto into AI. That makes sense. Then you have the software sell-off, which we're going to talk about a little bit deeper in a moment, was driven a lot by artificial intelligence. And software, if you take a look at software and Bitcoin, move hand in hand a bit. There's a good correlation between the two. So again, that's really why crypto is selling off. I still have a large portion of Bitcoin, haven't sold any, and I still think we bounce back from here. Is this the ultimate bottom in at 67,000 a coin right now? I don't know, but I do feel will be much higher in 6, 12, 18 months from now. Commodity chaos. With gold and silver going bananas to the upside, and then all of a sudden just silver lost 25% of its value in a matter of 24 hours. One of the most dramatic moves you'll see in any commodity. And one of the greatest moves you've seen, probably one of the top three you've ever seen in silver, ever. It's happening in this 2026. And these AI disruption fears that AI is going to disrupt sectors. And eventually it will disrupt every single sector and industry. It will in some manner, some more than others. Software was first. We'll talk about this in a second. The SaaS stock, software services. Then it went to commercial real estate. People said, well, if there's no more people going into code, we don't need commercial real estate. Then it went to shipping and logistics because some $6 million shit company publicly traded that sold its business for $4.6 million. Their business was karaoke machines. Said they have a software that's going to be 10 times better than what everybody's doing. Stocks got crushed. That's how crazy of a market we're in right now. And then we do financial services because, with the new cloud coming out, people thinking, well, when it comes to financial services, again, we're going to replace humans. And Schwab got killed. A few others got killed. LPL, Raymond James. Unwittingly, they shouldn't have been hit like that. Little pullback, sure, but shouldn't have hit like that. But the bottom line, what I'm trying to get at here, all these signals that are being sent, it's leading to investor confusion for very good reason, which is leading to great opportunity. So we'll take a look here at the next slide. And, the wild moves of 2026, fear, confusion, volatility equals what? Opportunity. It's a very simple equation in any market, in anything, really anything in life. Now, if it feels chaotic, you're not alone, because I feel it too. I try to lower my emotions, lower my feelings towards the market, almost being just numb. But I'm still human, so I get wrapped up in this too. There's been sharp sector rotations. There's been conflicting signals that have been coming out. And the mainstream media changes their story with the wind because they don't give a rat's you-know-what about you. The mainstream media wants clicks and eyeballs and everything else that gets advertisers in. So they'll say whatever it takes and dramatize everything. I was on TV for 10 plus years. I was guilty of it. I'll admit it. It's just what it is. So let's talk about the SaaS crash. SaaS is software as a service. And this was kind of the original AI disruption trade is what I'm calling this. The first one to kind of hit. And you can see here, this is the IGV. And this is the software ETF. Look at this. You can see the pullbacks. This goes back to 2000. Down about a third of its value, IGV, in the last few months on the right-hand side there. We've only had a few other pullbacks that have come back that far. We had one in 2020, which was the COVID. Then we rallied back. Then we had kind of that post-COVID sell-off when interest rates started coming up. Then we had to go all the way back to 08, 09, the great financial crisis. And then back to there, we have to go back to the tech bubble. So very rare territory, and every time they do bounce back. Do I think software is going to be disrupted? Yes. But I also think, I hate to use this term, but it's just the easiest one to use. They throw the baby out with the bathwater. They're throwing out all software stocks. Not all will be disrupted. Some will, and those will fail. Some will not, and they will thrive. So to me, you want to be very much a stock picker right now. Again, a term I don't like to use is stock picker's market. But as I show you some of these charts, folks, you're going to see this is a stock picker's market. So again, here's just another way of looking at that SaaS crash. What's really happening is these multiples, meaning the PE ratios, the valuations, they were high. Because these companies aren't coming out and lowering earnings guidance. It's just the stock price is coming down, so it makes it more attractive. The AI workflow creates all these fears. It's a valuation repricing, as I just mentioned. And the markets are pricing in the future faster than investors can process it. So the market's trying to price in where these stocks will be in 5 years, assuming there's some type of major AI disruption for software, and investors can price it, so they just sell first, sell first, sell first, ask questions later, which again creates opportunity. I'm not saying you jump headfirst into software stocks yet, but I think there will be a great opportunity. Bitcoin's similar. This is what they call a Bitcoin rainbow chart. It's kind of weird, but it goes back quite a bit, back to 2013, and it shows when it does pull back into this purple area, it oftentimes is a great buying opportunity. Almost always it bounces back to the upper end of that range. The upper end of that range, you're looking at, Bitcoin several $100,000 a coin. Will it take a couple years to get there? Potentially. But I just want to show you, not saying buy here that's going to go up to 300,000. What I'm saying is we're at this lower end of this range in areas we're rarely have seen since the introduction of Bitcoin over 10 years ago. That's how rare we are right now. Then there's gold and silver. So, we just talked about software stocks. We talked about Bitcoin. Now we're talking about gold and silver. This is a silver volatility index. I mean, look at this spike. Go all the way back to 2015, 16. It's a 10-year chart. It stays in the 20s, stays in the 20s. We had, obviously, the COVID kind of spike up, came back down 20. It spiked about 100 earlier this year. 100. That's how crazy it is. So now you have silver trading like a risk asset. It's not trading like you think it should be trading. It's like a risk asset. And you have to ask yourself, is it still a safe haven? And I'm going to put this poll out to everybody watching right now. I'd love everybody to get the feedback on this. How many people own gold or silver right now? How many people own it right now? Now, I'm going to guess 9 out of 10 of you own it. And there's nothing wrong with that. But I'm going to guess probably 9 or 10. But how many people own it? And if you want to add in too, how many people sold into this? Because I do know a lot of people that have been selling into this because they've had such big gains. But just put in there, yes or no. I want to see how many people actually own gold or silver, because I take an educated guess that a large portion of you do own it. And the other thing is, we're seeing the retail participation surging. That means you and I, the retail, not the big banks, not the institutions, not the hedge funds, not the mutual funds, the retail people, the you and I, the everyday investor participating. And when that participation gets super high, the pendulum tends to swing the other way. So I think the upside on gold and silver, specifically silver, is capped for the near term. It doesn't mean we won't have wild days to the upside and downside. I think the upside is capped, though, in the near term here. So the AI fear, though, is spreading across sectors. Again, eventually every sector and industry will be disrupted. Every single one. You'll say, well, the guy who cleans the toilets at the airport, it won't be. I beg to differ, because I was in an airport yesterday. I went to go to the bathroom and wash my hands after I got off the flight. A guy was in there cleaning it with his big push cart. Very nice gentleman. I looked over. There's an iPad on it. It said location, said where he was, where he had to go to next. That's all AI driven. So you think he sprays the toilets and leaves. And there's a great chance that could happen. So everybody be disrupted. Again, but it's not necessarily a negative. Everybody thought the internet and personal computers and email was going to destroy the world. It didn't. The thing is, though, you have to ask yourself, are you going to fear this disruption that is coming, regardless of what you think or want? Will you have FOMO, meaning will you have fear of missing out and start chasing these stocks? Sometimes you stay away because you're afraid. Sometimes you have greed. It's fear and greed, right? Drives most human beings. Are you going to have the greed, the fear of missing out, and just start buying every crazy stock that has AI in its name? Or are you going to have the fear of being wrong and just sitting on your hands and doing nothing? There's a lot of ifs there, but the bottom line is, are you going to decide to invest in the winners or the losers? Because there's going to be losers, but again, you have to know which companies you're investing in. And again, as I mentioned earlier, the pendulum always swings too far. Every cycle, every trend, it goes back and forth. The old grandfather clock there, the pendulum going back and forth. To me, the pendulum's very rarely in the middle, which let's call that fair valuation, very rarely there. The emotions drive it to extremes. And we have emotions now when it comes to artificial intelligence. We have emotions tied to Bitcoin. We have emotions tied to precious metals. But again, these emotions, these extremes create opportunity. And that's a word you're going to hear a lot today. You've heard it a lot already. Opportunity is very important. And this is just a quick breakdown. Go through this fast, but innovation cycle like we have right now with artificial, you kind of have that breakthrough narrative, and that was really when chat launched. That was kind of the breakthrough narrative that got everybody kind of interested in it. You have this big rally, then you have the markets. They get ahead of the fundamentals. They get ahead of themselves. What happened then? You have this pullback, bubble fears. We're in a huge bubble. Got to get out. Then you have this kind of shakeout where some of the companies do get disrupted. But all along, the adoption is moving along. Then people realize this is a real adoption. This is really happening. And then that is part of the beginning of what we call a secular bull market that lasts for years, if not a decade or more. So for me, we're still kind of in that pullback bubble fear area / shakeout where people are still worried about AI. But the real adoption is going on underneath the surface. And this is where, again, where the opportunity is. You get in before everybody else sees that the next big move in AI, how it's going to disrupt everything in this world and be one of the biggest disruptors in the history of the world. You want to be behind these companies. It's not over yet. So I just want to know some of my top calls. And the reason I do this is not to brag, is to show you that I've been in front of other really major cyclical changes. 2024 July, or sorry, 2014 July on Fox Business Live. So this is live. The video's out there. Everybody laughed at me. I said, I like Bitcoin here at 640 a coin. At the highs, obviously it's well off the highs, about 50% off the highs. At the highs, it was up almost 20,000%. AMD on March 6, 2009. I'll never forget it. Sitting again on Fox Business Live. I put out the Andrew Jackson portfolio. It was 8 stocks, I believe, by 1 share of each for about $20. And I said a couple will go bankrupt, a couple did, but that portfolio's killed it. And one of the reasons is AMD was in there at $2 a share. It was up as much as 12,380%. That is an investment of 10,000. We're taken to 1.2 million. Life-changing gains, folks. NVIDIA, not even that long ago. It'd be about 7 years in March, up over 5,600%. And that was in one of my newsletters when I was at Investor Place. I put that out. This is a kind of funny one going back to 2007, because you think disruption, you think technology. This is Samuel Adams, stock up as much as over 2,600%. And I did that because in 2007, when I used to drink beer, all these kind of craft brews were coming out. This was before really craft brew. The original was kind of the Sam Adams, something different. It wasn't the Budweisers, the Miller Lights of the world. It was Sam Adams. Saw it, recommended it on a show called Bulls and Bears back in the day. I used to be on Sunday mornings in August of 2007. And again, sometimes people laugh at you like, who's going to overtake Budweiser and that kind of stuff. And you see, so again, just showing I've been there for some other calls that have made people some money if they would listen to them. And last but not least, this is not a bear market, folks. It's in a repricing cycle. So people who say we're in the start of a bear market are absolutely clueless. If you're Robert Kiyosaki and you follow him and you like his book, fine. Don't ever take advice from a guy like that. Peter Schiff, who's been right, he's called, what do they say, 30 of the last 2 bear markets. Kiyosaki's been saying the same thing for almost 15 years, and he's been wrong for 15 freaking years. These guys are not good at the stock market, so please ignore that. So what does the data really say? As I mentioned earlier, data is what really important. So let's step away from what the mainstream media, what the talking heads are saying, and so let's take a look at the headlines. So here we have market breadth, and that means kind of the strength of the market in a whole. And it's expanding, which is bullish. So the equal weight starting to outperform the market cap in the S&P. So the RSP is the equal weight ETF, meaning every quarter they rebalance the 500 stocks in ETF, and they all get the same weighting, one 500th of it. The SPY, the S&P 500, is a traditional one that we know and love. It's market weighted. So the larger the company, the more weighting it gets. So obviously the Mag 7, the Magnificent 7, all over $1 trillion, much more heavily weighted than what we call the others. And the others are the 493, the other 493 stocks. But showing first number there is how they've done so far year to date. This was as of yesterday. The RSP, which is equal weight ETF for the S&P 500, up 5.6%. The spiders, the S&P 500, barely up 0.1. The MAGs, the MAGS, which is the MAG 7, only 7 stocks in there, the big 7, down 7.1%. So the difference between that and the equal weight S&P in less than 2 months, almost 13%. And then the IWM, which is the Russell 2000 small mid-cap index, again, up almost 7%. So we're seeing a shift. Because remember, the media told us for so long the market was not strong because it was only led by the big 7 stocks. Well, that's changed. That narrative's gone. Then I took a look, that second column there, that's the gains since the Liberation Day low of April of last year. The RSP still lagging the S&P a little bit, but you can see the Mag 7 was still leading. The IWM, the small mid cap, really bounced from that. But we're seeing that shift. So this shift isn't even 9 months old yet. This is a very new shift. And when you see this, typically this type of rotation into the equal weight, into the small caps, out of the very large cap growth, lasts years. This isn't something that lasts a few weeks, a few months. It lasts years. So do not sleep on the others, the 493. That's why I love the equal weight for my retirement account. We have small caps, we have foreign, we have non-AI stocks all outperforming. But you know what's crazy is people think the market's not doing well because the S&P is obviously only up 0.1% year to date. Over 65% of the stocks in the S&P 500, it's about two-thirds, are trading above both their 50-day and 200-day moving average, which is huge. That's really important to be trading that because that's showing that you're in a nice uptrend. Nearly 20% of stocks are at new 52-week highs. That's amazing. And if you take a look at when that's happened, when you've had at least 20% or more of stocks in the S&P 500, on those days it happens, look out 6 or 12 months, the market tends to outperform its average 6 to 12 months. So it does very well in that time frame. So again, the breadth, what's going on is telling us things are good. So there's the haves and the have-nots. Let me explain. This is kind of a funky looking chart. As I mentioned, S&P year to date, like flat. However, 94 stocks are up or down less than 5%. So you can see it's kind of in the middle of that chart, that dark blue. Then you go out to that orange. 117 stocks of the S&P 500, of 500 stocks, 117 are either up or down by more than 20%. This isn't a month and a half. This isn't in 12 months. This isn't in a year. This is in 1.5 months. This is a great from Bespoke Premium where I got this chart. That is amazing. That shows it's a stock picker's market. Again, I hate that terminology and it's overused, but this is the time and place where it is, or it's the RSP, the equal weight in my mind. But man, this just shows you probably have some haves and some have-nots in your portfolio. We do, we all do. Not everybody's in the ones that are going up on the orange side. So we have some geopolitical risk coming in. And this is a big reason that I believe energy stocks, which I'll show you a chart in a second of the energy stocks breaking out. But this is from Kaushi, and it says U.S. strikes Iran by, and this is by March 31st, so end of next month. Kaushi has it at 65% odds. This is what they call it. And a lot of times this is pretty damn spot on. And this was from the other day, but as you can see here, about $11 million traded in this. Not a ton, but still $11 million of people with real money betting on this prediction. But it's gone up a lot as of late. We've seen a lot of maneuvers, large ships, attack jets moving into the vicinity of the Middle East. Hopefully, nobody wants war, so hopefully not. But this increase is putting our new energy portfolio in even a better position to be a great hedge against other stocks in the portfolio. The put call ratio. So this is a contrarian indicator. When you buy puts, you're betting on that stock or that index to go down. When you buy calls, you're betting on to go up. So you take puts over calls. So the higher the ratio means there's more people that are bearish betting on a usually a short-term pullback. And you can see here, this goes back about a year. When this happens, it's pretty rare. So this tells me right now, situation that a lot of money's betting on the market going down. And when that happens, you play contrarian. So the put call ratio is typically a short-term play, but it's a short-term contrarian indicator telling me the market's going to do the opposite of where all the money's running into at this point. But at the end of the day, you want to be a long-term investor because that's where most people make money. And what drives stocks higher is a question I get often and I pose to people often. Most people won't agree with me, but I don't think there's any argument to it is if companies make more money, the company's worth more money, means the value of the company goes up, which means the price per share goes up. And here's earnings quarter over quarter, going back to 2023. So we had Obviously, COVID here, 2020, 2021, then a major spike because we had the economy reopen. And then, of course, we had interest rates go through the roof and we came right back down to earth. But since that, since the end of 2020, so 2 years, every quarter, look at year over year earnings growth, has been 8% or higher. Q4 right now, basically wrapping up earnings, coming in around 12% earnings growth over the prior year. The estimate for this current quarter, 11.1%. The estimate for next quarter, nearly 15%. So if we have earnings come in, let's say 2026, let's just throw out 12% year over year. If stocks go up 12% year over year, the S&P, that means the entire gain in that was not increased multiples, meaning the PE ratio went up. It's all driven by earnings. Last year was an amazing year. Nearly all the gains in the S&P were not driven by people pushing stocks up because they think they should be valued at more. It was because of earnings growth. So there's a real reason stocks and its earnings. However, people say, well, Matt, you think the market can pull back 10% this year? I think that we're due for a correction. I do. I think we'll have one. But earnings don't drive quarter to quarter. Yeah, they're reported every quarter, but they don't drive stocks. They drive stocks over several years. And again, when you're buying a stock long term, you better have a 5 to 7 year time frame. And if you believe that stock's going to be making quite a bit more money in 5 years, and it does, unless something odd goes on in the market, there's a great chance in 5 years that stock's worth a lot more. So earnings, to me, take away all the nonsense bullshit that's out there. This is extremely important. All right, the big shift. So what's happening on here under the surface? I call it the great reversal. Look at this, the year-to-date totals. And again, I'm going to hammer this home. I talked about this before. This was as of 2/6. This is a little bit, a week or 10 days ago, almost 2 weeks ago. But just it's showing the principle. Emerging markets, U.S. mid-cap, international developed, U.S. small cap, U.S. large cap value, been out of favor for many years, U.S. equal weight, and U.S. real estate. Then we have the S&P 500. Then we have large cap growth. Then we have the Mag 7. So these are all areas that people were underweight for so long. And again, folks, that's why you got to be the wolf and not the sheep. When everybody's doing the same thing, it could work for a little while longer, but it's okay to kind of shift over and see where you see some value somewhere else. And there's a lot of value still out there in these sectors with rotation just beginning. So where is the value? This is kind of flies in the face of what I just said, but I got to put it out here. This right here is showing a forward PE ratio. So for the next 12 months of the Mag 7, but also Walmart, who reported earnings today, and okay numbers. But look at the forward PE ratio. You think Walmart would be the lowest of the Mag 7, and it's not in the Mag 7, but look at Walmart, where their forward PE ratio is versus others. Look at Meta, trading at a forward PE ratio of less than 19. Look at NVIDIA, the world's largest company, one of the most important companies over the last 4 decades, trading a PE ratio, forward PE ratio under 19. This is not bubble territory. If all these were in the 40s and 50s, I could argue with you. So I'm not saying you rush out and buy the Mag 7 here. I think the other 493 are a better play. What I'm saying, though, is when people tell you the market's in a bubble, I don't see it. Show them this. Where is the bubble? Unless suddenly these earnings that almost everybody in the world thinks that these companies will hit just disappear and something happens. And something could happen. You never know with life. Nothing's guaranteed, but this is not bubble territory, folks. And this big shift we're seeing is going from digital to physical. We've seen the money flowing. I've showed you several times now. Money flowing from digital tech into real world assets. Where the winner's been? Commodities. Talked about commodities. Copper's still my favorite commodity for 2026 and beyond. Copper's still my favorite. Infrastructure. Because this new energy portfolio I'm putting out, it's driven by AI, demand for electricity. That demand for electricity means we need to generate more electricity from energy, whether that be fossil fuels, oil, gas, coal, renewables, wind, solar, hydro, nuclear, obviously. But to have all that, we need better infrastructure of the US grid and the global grid to get everything where it needs to go. New data centers to keep up with the AI demand. So all three of these are doing very well and will continue. But the losers as of late have been tech. I just mentioned that, you know why. And then services, such as financial, legal. You think about AI, what it's going to replace, like LegalZoom. I'm not picking on the companies, just when it comes to mind, LegalZoom.com or whatever they call themselves now. Uh, I think most of those contracts can be done through AI. I don't know if you really need to be paying a company like that. Will you replace somebody just as a Charles Schwab? I don't think so. Funny enough, I can look out this window in my original office in June of 2000. My first job out of college was at a Charles Schwab branch about 3 blocks from here. It's no longer there, but it was my original office. And I don't think Charles Schwab is going anywhere. Will AI disrupt the financial services? Absolutely, and it already is. Doesn't mean Charles Schwab is going anywhere. People aren't going to entrust their portfolios to just putting into AI. It's just not happening anytime soon. But that's what we're kind of seeing. Digital to physical right now is a trend that we're seeing. And then there's the infrastructure boom. Grid upgrades. I've been saying for 10 plus years, for people who follow me, the US grid is absolutely pathetic. Pathetic. And it still is. It was pathetic before I knew or anybody knew the demand from AI, the electricity that's needed for it was coming. And now that that's here, we're in deep shit. The US and Europe. We need to upgrade the grid now. Get through all the BS in DC and start upgrading the damn grid. What happened to all that money that Biden passed for all these upgrades? Where the hell is it? Another thing is it's energy security. Countries don't want to rely on other countries, which a lot of times are their adversaries, for energy. Because if your country doesn't have energy, you're screwed. And folks, this global infrastructure boom is a global investment story. This isn't the US. Some of my biggest winners we have, and I'll mention because they've gone up so much already in the McCall letter, Prismian, largest cable company in the world based out of Italy. I think we're up like 80, 90% or something on stock. A few others out there. We have one, again, these aren't buys anymore. These aren't buy, sell recommendations. Another one is a company called Stella Jones, which is the largest utility pole company in North America based out of Canada. Big winner for us because we need stuff like that, but it's international. It's not just US plays. We need to think outside the US. And I tell you what, your broker's not going to do that. We will here, though, because I love finding stuff that nobody else has found. Now, the new energy super cycle, here it is, powering AI and innovation. And this is one of the most overlooked investment themes that we have today, folks. So I'd like to introduce the new energy portfolio. So why am I doing this? Well, there's this massive rotation of capital, which I've been talking about. That's rotation of capital, but it's not just happening because there's value here that wasn't there before, that there's value here because the other sectors have gone up too much in price. That might have a little bit to do with it, but it's more that this rotation of capital is backing a mega trend that has a huge tailwind behind it. As the energy demand accelerates, we need these investments, and these companies are positioned at the forefront to take advantage of it. And again, this is the early stage of what I consider a very long-term megatrend. And I don't think anybody's going to argue with me about that. And again, within this megatrend, the stocks will go up and down along the way, but most likely lower left to upper right move higher over time. And the opportunity within this, which I love, this opportunity spans several sectors and industries. It's not like just go out and buy oil and gas stocks. Don't just go out and buy coal stocks or renewables. Don't just go buy companies that make the grids, utility poles, or the transformers or the switch gears, the companies, the architects and the engineers that put these together. Not the companies that make the software for solar, the software for the grids, not the companies that make the data centers, not the cooling companies that make the coolers needed for the data centers, the chips, everything that goes into this. You see what I'm getting at, right? There's so much opportunity here. And that's what gets me so freaking excited about this, is we don't have to zero in on one sector. We're going to have different portfolios. We already have tons of exposure to this trend, but this new portfolio from a call letter will be the new energy portfolio. And I'll talk about the stocks in a minute, and I'll give you a free one. But who is this portfolio for is a good question I get. Like, is this for me? Well, first of all, you have to be able to think long-term. And I hate to break it to you, folks, long-term isn't 2 months. It's looking out several years because this will be a long-term trend. It's investors that want to get some exposure to real assets. Think about that. You're looking at real assets. not just investing in services, but real assets. That's important because a lot of portfolios are underexposed when it comes to real assets. This adds a much needed diversification outside of technology, outside of services. But at the same time, as I just mentioned, still to getting some exposure to the AI megatrend, but not that direct exposure to picks and shovels, which I love, which tend to be some of the best performers of any trend out there. And it's also investors that are willing to be early. We're not super early, like getting into flying cars now, getting into drones years ago, that type of stuff, getting to Bitcoin in 2014. Not that early in the grand scheme of things in the cycle, but you're still early on some of these. It might take some time. And we have had some stocks in our electrification of everything portfolio. And these are some big companies, companies worth close to $100 billion. Two of them just breaking out now. It took about a year, and they're both doing well now, but it took a while. Even though they're huge players in electrification of everything, it just took some time. Sometimes we're early, so you have to be willing to be early. And being early is okay. So, and I want to reiterate, this is not a short-term trade. We're in the early stage of a multi-year trend. I built this portfolio. We're starting with 4 stocks today. I already put them out there. If you're a subscriber, you already got them. But you're getting a free one here in a minute. I built this for the investor to understand how to profit from a powerful trend. You have to understand that. This is a trend. We're investing in a trend, not a single stock, in a trend. And any huge profits, they're generated from riding the long-term trend with what I believe is some of the best tailwinds you're ever going to get. So how I built it? Well, I went for diversification across the entire energy ecosystem. So I have a mix of some growth in there and some value, a little bit of both. I have exposure to U.S. company and international companies. There's a small cap and there's some large caps. So above average risk coupled with more stable companies in these 4. And what that does is it leads to our basket approach. You can call it portfolio approach. I like to call it the basket approach. Put your eggs in the basket. So the reason I never pick one stock, I pick a trend I love and I try to get every angle into that trend. It gives you instant diversification. It lowers that single stock risk because you may say, well, Matt, if you would have just picked this one stock, we could have been up this much and these other 2 are down. Well, if you're a member of McCall letter, our portfolios are doing fantastic. And yes, in each one is one that's doing much better than others. But each one has a stock that's down. Not everyone. Most portfolios have a stock that's down. Yeah, we maybe would have picked that one over the one that went up. Then you'd be pissed at me. But the portfolio is beating our index. We're trying to take a very calculated reward to risk ratio in doing this. And we still captured a full trend. And we also have the chance of multiple winners. We can hit the jackpot on all of them. And we still have that ability to do that. And it's super important to take this approach. And it's similar to building your own exchange traded fund, your own ETF. But when it comes to an ETF, do you really want exposure to 70 stocks where you only like 8 of them? No, then the other 62, you're not really getting exposure to the companies that you want. And a lot of those end up being market cap weighted, so you're only in the huge companies. You're not getting exposure to the smaller ones. All right, so this trend, just so you know, goes far beyond oil. We have traditional energy, which is fossil fuels. We have power generation and utilities. We have energy storage, which is super important, one of my favorite niche trends. Renewable energy, believe it or not, it's been doing very well. And then, of course, the infrastructure needed for this whole energy build out. So again, some of my top calls just based off this, because I want to show you again, I've been here. So in 2024, and every year I do my outlook. In 2024, I had an entire section about energy grid and the upgrade of the grid based on demand of electricity increasing. This was very early on. 2 of the stocks I recommended are, again, since that date, up as of today, 811%. Primaris, PRIM, up 400%. And then Eaton, I wrote an article way back, 13 and a half years ago in Seeking Alpha. You could see the article. Stocks up almost 1,150% since then. So again, I've seen these grid changes before. I've been behind this area. I like this area. I get pegged as a technology guy all the time, but I like innovation. And when it comes to innovation, you need the picks and shovels. So remember, before I get into the free stock pick here, the biggest gains come early. Regardless of what you think, this trade still is in the early stages. Wall Street is not completely on board yet, but they will be. And as we know, mainstream media will be the last ones to the party. When Jim Cramer's out there screaming something, please don't listen, please. but the rotation of capital is starting, so you have to get in now. It's going to be too late soon. It really, really will, because we're seeing it. We're starting to see more articles about it, more people I really respect in the industry talking about it. So it is coming around. Now, you're ready to make the move, so let's introduce the portfolio. Anybody want to take a guess to what the stock is? If you guess it, I'll give you a lifetime membership for free. I'll give you about 20 seconds here as I try and find where I set my water to wet the whistle here real quick. So you have about 10 seconds to guess. I mean, the chance of you getting it's probably 0.0001%, but I'll give you the chance anyway. And folks, don't forget to comment, hit the thumbs up, let your friends know. It really helps us out. Well, Terry's coming in with two here, and they're both SMR companies, Oklo and NNE, Oklo, I should say. No, but those are great. That is a great one. That is a great one. Another guess here for TGB, which is Taseko Mines, which is one of my favorite copper miners, based in Arizona. Just got the new mine up and running. Not it. Bloom Energy, BE, another great guess. These are all great guesses, and they're not in the portfolio, but they're all great guesses. So I appreciate it. ExxonMobil, that's a good one too. It's not ExxonMobil. There is a big company in the portfolio, but it's not ExxonMobil. This one's a $1.6 billion company. More on the infrastructure side to give it away. But let's take a look at it. UI, ASTS. It's not ASTS, which has to do with satellites there from the Cuban guy. No satellites here, but I do. A lot of these companies you guys put out there, I really do like them. But all right, let's take a look here. SanDisk, another great company. Terry, you're spot on. Great companies, but not in there. So it's called Thermon Group, symbol T, energy build out. And let's tell you a little bit about the company. You can see the chart here. The stock's run up hot, and I hate to always I don't feel like I'm chasing here. I think there's a lot more upside potential, but it might pull back a little bit, and it has pulled back a couple bucks from the high. But here we go, Thermon Group. It's a leader in heat tracing and industrial heating. So it's used by companies that are in energy, specifically in LNG, which is natural gas and power infrastructure. So it's a bit diversified, even though it's a small company, about $1.6 billion market cap. But it's a direct beneficiary of the global investment that's going into energy industrial projects. So, a company like this, when you have a $1.6 billion, you get a nice backlog going, which it has, and you get a couple of decent contracts. It makes a big difference versus the infrastructure engineering firms that are worth $200 billion. It takes a lot more to move the needle there. They do have a large installed base, which drives reoccurring revenue and maintenance revenue. And that's one of the great things. And that's why SaaS stocks did well for so long, decade plus. Reoccurring revenue. It's a great business model. So that's really important. But this has that as well. And because it's specialized, smaller company, they have in niche areas that there's a bit higher barrier entry. They have what we call a moat. We look at businesses for me to invest in long term. I want to have moats. You have moats. Moats are where it's tough to get in, and you have these relationships with customers that are probably not likely going to leave you and go to somebody else at this point. Global footprint, which we always want to have international exposure. Benefit from multi-year energy infrastructure cycle I've been talking about. And just about 2 weeks ago in early February, they just raised guidance again. So coming out saying we're going to make more money than anticipated. So so that is, yes, somebody just asked if I'm going to do a lightning round at the end. I'll do a lightning round at the end. We'll take your questions 100%. So here's that is a free stock idea. Again, this no buy or sell recommendation from me, but I do like to share ideas, do your own homework, do your own due diligence. If you are already a member of my call letter, you can go log in right now and see the other three stocks. The entire portfolio has been put on the webpage, this plus the other three. So you have access to those immediately. So Thermon Group, any questions on Thermon Group, let me know, throw them in down there. Also start putting in your questions down there as well. I'm going to take Q&A and go through your little lightning round for you as well. But, as many of you know, the McCall letter, join today, immediately get the 4 stocks, Thermon plus 3 more, plus all of our other portfolios. There's over probably 30 some stocks in there right now. Our portfolios have been knocking the cover off the ball. And if anybody's a member and wants to put in there, we've just done well, and we continue to really focus on the trends and building out baskets, and that to me is extremely important. One of our stocks, it's in a future innovation portfolio, is what I call the future innovation, and it's got stocks in all different angles. But one of the stocks that's in there is Deere. Deere doesn't sound like a future innovation company, but it is for us. They reported earnings. The stock was up 11% today to a new all-time high. We're up almost 50% on the stock in a few months on Deere. deer. This isn't like, we're not pulling, penny stocks out of the corner. There's good companies that go in there as well. So I'd love to have you join the family. Again, $79. That's all it is for the year. You get all the special reports that come with the new energy portfolio, the portfolio, all special reports we've ever done, all our back issues we've ever done. And again, every Tuesday, you get a video of me talking about different ideas, going through portfolios, and then, trying to answer all questions you send in throughout the week. So again, for $79 for a year, it is a steal. I know some people say, well, $79, I can get this shit for free online. You can, but you're going to get shit. So if you have any questions for the lightning round, any stocks you want to take a look at, feel free to send it over. But again, folks, the track record speaks for itself. Obviously I've had losers, but I've had a lot of winners. And you don't stay in this business for 25 years if you're not that good at it. Well, I guess there are some people that have, but it's very tough to stay if you're not that good at it. We'd love to have you join. And right now we're actually doing even something a little bit nicer. I introduced just this year something called the Disruptor 25, and this is a private index of 25 companies that I've curated myself. That's kind of I believe will shape the world going forward. It tracks mega trends in AI, robotics, healthcare, you name it. I update this every quarter, and my goal is to put this out and put this research out and update this. And this is our index. We're creating our own index that we can really have, that this will track how the disruptors are actually doing. These are the ones that will not be disrupted. It's not a trading portfolio, it's a long-term map. And anybody who upgrades to lifetime, which is a little bit more if you decide to buy, you get this as well. And only our lifetime members are getting it, which is kind of cool. So again, please feel free, the link on the side, give us a call. But I'll take your questions now if anybody has any questions on stocks. If not, we can wrap up. But let me know if you have any questions you want to call into. And our lifetime is the price of just 1 year. So you get lifetime forever, anything we do in the future through my call letter. And again, access every quarter to the Disruptor 25 index, special monthly live webinars with me as well. So you get that as well to ask questions like this, but for our lifetime members only. So anybody have any questions here on stocks, please let me know. Take a look at the market here for you if you want as well, but just throw any stocks out there. What I'm going to do here real quick, though, I'm going to click over to another screen here and pull up the S&P, because I think it's important to kind of show you what's going on here in the market and why people are so wrong. So here's the S&P 500, folks. And as I mentioned, tight trading range. That's a very, very narrow range. I mean, really going back to September, this range here is, about 6% range. Very, very narrow. And even for the last few months from December, we're at about a 3% range. So this market, typically when you have a tight trading range like that, picture it like a coil, tighter, longer. When it releases, poof, it pops. It usually goes big one way or the other. Obviously, I'd like to see it go up. History tells you it goes in the direction of the prior trend, which is up. But you never know. Something geopolitical could happen to push it down. But to me, the S&P 500, as you can see, still trading at just about 2% from an all-time high. But here's the RSP. This is the equal weight. A little bit different, right? We started consolidating, but then we broke out of that consolidation, where the S&P did not. So a little different. And then here's the Mag 7 ETF. Even different, consolidating, breaking down a little bit. Just on Tuesday, we hit the lowest level in the Mag 7 going back to August of last year. So you're seeing this rotation, and it's definitely continuing. Here's the IWC, and this is the microcap index in September, much higher. Still a nice uptrend. That chart looks fantastic there, to be honest with you. What do you think the outlook of AI stocks in 2026? I still love AI stocks. That's a tough question to answer, because when you say AI, are you referring to the big seven, the hyperscalers, or the big four hyperscalers, the NVIDIAs, the Amazons, the Microsofts, the Googles of the world? Are you talking about everything that's AI related? I think in general, the AI trade will be volatile this year, because there's going to be certain sectors that got hit. I mean, heck, in 2 weeks, we saw it go from the software stocks, the SaaS stocks, to commercial real estate, to financial services, and then shipping and logistics. We saw it hit all those areas. A lot of them bounced back from there, but we saw it hit all four. It's going to hit a lot more throughout the year. But again, with that, I see opportunity. Overall, the AI trade is in the first inning of a 9 game. We have so much more to go over the next decade plus. I mean, this is something that's going to go on for the foreseeable future. Um, so yeah, I tough to answer that. The bottom line though is that yes, this AI trade is not going anywhere. Um, would you buy Amazon here? Let me take a look at Amazon. I'll let you know. Um, just based off the chart, I wouldn't buy it here, and I'll tell you why. Um, Consolidated for a while, as you can see, it came down on earnings. It fell on earnings and gapped down, and it stayed down, trying to rally back, but the volume's been lighter on the upside. So you got a ton of resistance right here around a 212, 215 area. You got these gaps, so it might bounce around there for a little bit. I'd like to see it build a base first. Kind of go sideways, hold this 195 area, if you will. And what's pretty amazing is that it's a gap that goes all the way back to May, that 195. And it's crazy how these gaps get filled, folks. So they filled that gap. So I think short term, you get a bounce out of this. I think you could see a short term bounce. You have the RSI giving a buy signal right there for the first time in over a year. But I just don't. I have no rush to jump into it right now, if that makes sense. I mean, do I think Amazon is going to be higher in 3 to 5 years? I do. I just don't. I don't want to jump in right now. Somebody's asking about Applied Digital, APLD. I love this company. It's an extremely volatile company. It's funny. Look at this chart. It doesn't look like it's not that volatile, but you can see it. It was in December. It was down to 22, and it was up to 42 about a month later. That's what 90+% in gain. It doesn't look like 90%. Then pull back and rally back again. And now what I'd like, the opposite of this chart is, see the big green, big volume coming on the upside. Look at this. The stock's been down now, my eyes are bad from back here, 7 consecutive days, super light volume. So it looks like it's due for a bounce. I love Applied Digital longer term. So I think it's just, when you're in a stock like this, you have to just realize the volatility that you're getting with it. It's just going to come with it. Is higher than the pullback we had earlier this month. Sloppy uptrend, but higher lows, higher highs for the most part. Sloppy but nice uptrend that buyers are coming in at a higher price every time. So I anticipate buyers coming in soon on this. But again, I like this long term. Short tough for me to answer this, but anything can happen short term. But long term, I do like this here. But again, folks, don't forget the links over there on the side. We'd have you join the call letter. Get all 4 stocks right now from the new energy portfolio to come in right now. THR obviously is one of them, and then the other 2 you'll get right away. Let's see, SoFi. I love SoFi. I love this company. I don't like the way it's acting right now, obviously, but I really, really like this company long term. I'm going to show you a little bit longer term chart to give you an idea of it. You can see, it had a nice run here last year, rolling over a bit. Yeah, again, a lot of these kind of financial services companies have been getting hit. I think it's unwarranted. I think there's a huge upside for SoFi. SoFi sometimes, strangely enough, gets kind of wrapped up in kind of when Bitcoin pulls back ordeal sometimes too, which I don't think, again, is something it should be wrapped up in. It's still not that big of a company. It's about $5 billion company. I look at earnings growth. So this year, which their fiscal year ends December 26, estimates for earnings per share are 60 cents, which is year-over-year growth from last year, 55%. Next year, 81, a buck after that. So you're trading at 2028 earnings per share of a buck, which puts about 19.5 PE ratio. PEG ratio here is below 1. I just think there's a lot of opportunity. Forward price of sales is around 5. Again, for a company that's growing revenue this year, expected almost 30%, growing earnings 55% year over year this year, got a PEG ratio below 1. It's tough to ignore that. This is a stock that looks pretty damn good. BMNR, I feel like I get this damn one every time. I just don't like the way these stocks are acting. This is a bit mine. I think this is Tom Lee's, right? Tom Lee's Ethereum treasury. Obviously with the way crypto's acting, these are not going to be acting well. The treasuries, to me, I just don't digital asset treasuries. That I don't fully understand them, to be honest with you. I get, if they keep buying them and the stock and the price of crypto goes up, it works, but it's not working with the price going down. Could this be a great buy down here? Yeah, it could be. I don't understand it enough to say that you should go out and buy this or sell this or stay away from it, which leads me to believe, I put my hands up sometimes. I try to stay in my lane, and that's outside my lane, to be honest with you. Um, Question on nuclear stocks. Nuclear energy, I still love, and we'll take a look at the uranium miners ETF, and this is not pure nuclear, but this is one I've owned for a while in my own portfolio. Uh, uh, Great way to play uranium miners, which obviously you need that in nuclear energy. There's a couple other ETFs out there. There's NLR, which is going to be a little bit more individual names, especially some of the higher beta names of the world. Take a look at like NewScale SMR was. Okla, which a lot of people talked about building a bit of a base, looks like. Nano Nuclear NNE, from where it was. I think we're at a price now that they are attractive. But keep in mind, a lot of these companies, they are not going to be making money for a long time down the road, if ever. So please keep that in mind. Fiserv. Fiserv is just, I don't like, obviously, you see why I don't like the chart. But these are earnings gaps. Here's earnings, right? Well, it's fast where stock gaps down from 220 to 180. Let's fast forward 3 months. Stock gaps down from 170 to 130. Fast forward 3 months, 130 down to 70. It's missing earnings consistently over and over, disappointing Wall Street. So until it does something different, I don't even look at this company. Yeah, I want to stay away from it. Let's see. Invest in U.S. market elsewhere. That's a great. I love international investing, and I hope you join McCall for $79. Shit, please do it. Like I'm telling you, and if you went to Lifetime too, it's great because you get the Disruptor 25 index. But I'd love to do all this stuff for free, but I have employees to pay and obviously bills to pay here as well. But and again, you're getting great information for it. But if you follow us, you remember, that we have exposure to companies in China, company in Switzerland, company in Italy, company in Canada. These are the ones I'm just picking off the top of my head, and a couple other countries. I love investing internationally, and I always thought about just doing a complete newsletter on it, but people don't want that. So one of the other portfolios I'm going to introduce to McCall Letter, which again, as a member, you get this. It's all free. Every new portfolio yours is free. Is an international one. And some of these you might have to get an international or interactive brokers account or somewhere where you could buy overseas. It's very easy to do. I have one, just because sometimes they don't trade in the U.S. and it's very simple. You just buy any other stock, but you use interactive brokers or another brokerage firm that does it, and you get exposure to companies that you might not ever have exposure to. I hit it big a couple of years ago with a company called XAL Technologies out of France. Made like a 5xer on it, and I read about it in some research I followed, just like McCall Letter, but it's another one. And but at the time, you can only buy it on the European exchange. Now you can trade in the U.S., but there's ways to do that. So yeah, I definitely believe in overseas, and you should. Precious metals. I mentioned precious metals already. I I think silver's. I'd stay away from. It's too volatile to me. Gold, I think, has a higher probability of being lower in 6 months than higher, so I'd stay away from them. Good question on TAN. This is a solar ETF, and what's crazy, when Trump came into office, everybody's like, "Oh, he's going to kill renewable energy, going to kill the stocks." You can see how they've done. This stock has done this ETF's done fantastic. My goodness, you go back just to that April low, it's well more than doubled since then. This is one of the best looking charts you'll see in the market. It's one day from a 52-week high. So holy smokes, yes, solar is quietly continuing to gain ground. You're not getting the fanfare that you do from the other administration or prior administration or Democratic administration. You're just not getting it, and that's fine. A lot. Politicians, leaders, whatever decisions, they can't stop innovation. And you have exposure to a couple solar stocks. And Last year, we had in our select portfolio, which we made 2.5 times the market. We had Next Power NXT. Look how well that thing did last year. It was our second biggest gainer. Outside of it was our biggest gainer. So yeah, I do like TAM, man. I'd ride that. Ride it, ride it, ride it. Let's see. Oh, thank you. Somebody that I hit home runs for him. But yeah, folks, I mean, we still have a lot of people on. We're not losing people, which is fantastic. I'm glad you're here because I'm just sitting in a hotel room here as my producer's in another hotel room on a different floor. Help me run through this. But yeah, folks, please, I'll keep taking questions or anything you want to talk about because that's why I'm here. And thanks. The Cuban guy's been following me for 6 years, and it's great because I've had some people follow me for literally 2 decades. It's crazy. It makes me feel a little older than I should. But if you want to send me a birthday present, my birthday is in 5 days. I will not tell you how old I'm turning. If you guess that, I'm actually I'm not going to give you anything because if you guess that, you're going to insult me for saying how old I really am. So I won't say that. But yeah, again, folks, we'd love to have you jump in. We'd love to have you join. And again, for the call letter, it's not expensive. It's $79. We'd love to have you join. And if you want to jump in and get the Disruptor 25, which again, this is new. I just did it this year. It'd be updated every quarter. I'll do the first update at the end of March on this, but feel free. But yeah, please check us out. Let me know. Let's see. Just sending those for. Somebody just asked where to find the Disruptor 25. So once you log in, join as a lifetime member, we'll be send it out to you. So we'll definitely get that out to you. Somebody's asking, I don't know what those 49, 47. I'm not quite sure what that means. I think that's how many people are watching right now. Thank you. But Terry, thanks. Yeah, Tim Bowen, great guy. Great guy. I just talked to him not too long ago. Of course, him and I had the podcast for a while. Funny, very, very different as far as our strategies. He might be trading minutes and hours, and I'm looking long term for the most part. I love swing trading as well. But we take a very similar approach, which was super cool doing a podcast with him. Unfortunately, both guys are extremely busy and just tough to get our schedules together. But so yeah, thank you so much for following me since then. I'm not telling you big birthday, put it that way. The number that you look in the mirror and be like, where'd the time go? Number that you start calling your Botox lady and saying, I might need some more. So yeah, it's one of those that we're looking at. But anyway, but yeah, well, again, folks, please, if you have any comments, questions, let us know. But if you do become a lifetime member or your lifetime member, we'll make sure you get the Disruptor 25 list out to you in the short report that goes with it, kind of nailing down the stocks. And then don't forget, all members that are people are members already or joined today. The new energy portfolio is out there. And the report I just finished, like I said, I just picked up the last stock today. It's go and I'll have my producer get it online for you right away to break down the 4 stocks and a little bit about the portfolio as to why we put it out there again. But folks, thank you so much. You make my life fun. You make it easy. You just had the last 64 minutes fly by like that for me. But again, from the bottom of my heart, thank you so much. Without you, I wouldn't be able to do what I do. And money. Remember, the McClure is about 3 damn things: educating you, number 1. Number 2, have some damn fun along the way. Number 3, let's make some freaking money. So for everybody here at Next Wave Research, thank you so much. Don't forget to like and subscribe to the channel and pass it along and put some comments in there. But have a great rest of your Thursday. If anybody in Mile High City, wave on your way by. Yeah, thank you so much. And we'll see you next month. We'll jump on here again. So again, for everybody at Next Wave Research, I'm Matt McCall.